Hello, everyone. Welcome back to another episode of Money Talk Sundayz. I'm your host, Stevie Bee, where we discuss intriguing, sometimes counterintuitive topics in finance. Today's topic, we're going to delve into a concept that may seem unusual to some, and that is actually trading against the S&P 500. Yes, you heard it right. What I'm talking about today is trading against the S&P 500, going against one of the most trusted and widely followed indexes in the world. Now, before we start, I must clarify that this isn't investment advice, but an exploration of a diverse approach in the financial markets. So before we go, cue that music. Again, well, thank you. Welcome to Money Talk Sundayz. I'm your host, Stevie Bee. Make sure you hit that like, share, subscribe button in the description box. And let's get right to it. Trading against the S&P 500. Now, the S&P 500 is often hailed as the holy grail of indexes. It comprises 500 of the largest companies listed on the U.S. stock exchanges, essentially providing a snapshot of the U.S. economy. Now, it's stable, it's reliable, and it has a long history of delivering steady returns. So with that being said, why would anyone consider trading against it? Well, first, let's clarify what trading against the S&P 500 actually means. Now, it's not necessarily about short selling the entire index, not at all. Instead, it involves strategies such as taking positions in assets that are inversely correlated to the S&P 500 or buying into sectors or companies that are currently underrepresented or not included in the index. Now, one reason for trading against the S&P 500 is diversification. Diversify your portfolio, like they always say. Now, while the S&P 500 includes a broad range of companies, it's heavily skewed towards the largest ones. The top 50 companies make up over 50% of the index's value. Hence, if you're only following the S&P 500, your investments are highly concentrated in a few big players, leaving you exposed to sector-specific or company-specific risks. Now, by trading against this index, you can diversify into other sectors, smaller companies, or different asset classes that can offer opportunities for alpha or risk-adjusted performance. Now, another reason trading against the S&P 500 is a good tactic is the potential for higher returns. The S&P 500 has historically provided steady, but not spectacular returns. Now, in bull markets, it's common for certain sectors or asset classes to significantly outperform the S&P 500. For example, during the tech boom of the late 90s, tech stocks massively outperformed the broader market. Similarly, during the housing boom of the mid-2000s, real estate-related stocks and assets outperformed the S&P 500. Trading against the S&P 500 allows you to seek these higher returns. Now, finally, trading against the S&P 500 can provide a hedge against market downturns. Now, when the market crashes, the S&P 500 usually falls along with it. Remember, it has the 500 of the largest companies, 50 of the largest companies that make up the 50% of the index's value. The top 50 companies make up over 50% of the index's value. The S&P 500 is going to fall if the economy falls, if the market crashes. But some assets, such as gold or certain defensive stocks, often perform well during these periods. By trading against the S&P 500, you can include such assets in your portfolio, providing a hedge against market volatility. Now, trading against the S&P 500 is not without its risks. It requires a thorough understanding of market dynamics, careful risk management, and a willingness to accept potential losses. But with careful planning and execution, it can provide diversification, the potential for higher returns, and a hedge against market downturns. And that is it for today's episode of Money Talk Sundayz, trading against the S&P 500. Remember, the world of finance is not black and white. It is a rainbow of opportunities. You have your blues, your reds, your greens, your orange, your yellows, your Roy G. Bivs. Don't limit yourself to the standard path. Be curious, be bold, explore, and you might just find your pot of gold at the end of that financial rainbow. Until next time, this is your host, Stevie Bee, signing off. Keep exploring, and happy trading.